Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be looking at a bunch of key markets. We're going to be looking at gold, the Great Britain pound, Japanese yen. We're also going to be looking at the natural gas. We put a trade idea out for natural gas yesterday. Interesting price action. I think we may be testing 2025's low relatively soon. We're also going to cover the NQ, the E-mini Nasdaq Futures. I'm going to go ahead and cover that, maybe show a few intraday trade ideas there. Also, our 9 EMA. Our 9 EMA is in action. We actually have a silver trade going right now on the 30-minute time frame. Doesn't look too good, but we'll wait and see exactly how it pans out. So if you're brand new to the room, be sure to say hi. Welcome. Tina Jin, good to see you, Tina. Welcome. Tuku, always a pleasure, Tuku. All right, guys, let's get right into price action here. This is our gold chart. What I have plotted is a 9 and a 20 EMA. This is from our 920 EMA crossover video. Pretty popular strategy. It's one that I really like, and it's given us some great opportunities to make all sorts of different trades. The daily chart for the gold is a fantastic swing trading mechanism, especially with this strategy. It's really, I mean, you can see exactly where you got long. This short gets washed out right here back on the 4th of November, and I mean, it's been long ever since. Absolutely fantastic trade. That's one of those we call a retirement trade. You hit a few of those trades where you make actually that many pips on one trade, and you really start talking about living the life and talking about the big dreams. So it's a fantastic strategy. As with anything that we talk about here today, I'm not a financial advisor. I was told to stress this again today. I'm not a financial advisor. What you're going to see is some charts that I'm looking at, some ideas that I'm considering. And if you have any questions at all, if you'd like me to look at maybe one of your markets, I'm more than happy to do just that. Lita, good to see you. Lita, welcome. In any case, this is relatively straightforward for me. The gold market has not been on my radar. It really hasn't. I mean, I look at it every day. I'm not trading it right now actively. I didn't do it all through February. We're actually done with February's trading tomorrow. We'll talk a little bit about the psychology then, but I was going through doing the books. Had a pretty good month just trading crude oil and Euro FX futures. As far as gold goes, I can't wait to get it back into my repertoire. It's really one of those markets you can make a lot of money on, but you have to be in the right conditions. And I'm starting to see signs that we're back to normal for gold. This daily chart, you can see just incredible volatility those 3 days. We've been trading inside of that for 3 or 4 weeks. I say it every single day, but it's important that we put the price action in perspective. We absolutely have to put the price action in perspective, because if we don't, you're going to sit around thinking that today is the same as these days, and it's not. The price action is completely different. The players are completely different. The technicals are completely different. So I want everybody to understand that these markets are definitely drying up a bit. And when I say drying up, it means the daily ranges are starting to come back down to where we can sink our teeth into them and have a little bit of a chance to profit, even if our trade locations aren't perfect. So for this one, what's a pretty good trade location? Well, I'm a big Fibonacci trader, pretty much my bread and butter. I'll show you a chart. I actually just sent it out to a trader that was asking me some questions earlier via private chat over in the How to Trade room. Sent him my daily chart and how I do this, but Fibonacci's are a big part of it. Big part of it. For sure. Let me see. Andrea Garwell. Good to see Andrea. Welcome. Euro USD and the Great Britain pound USD. Absolutely. I'll be sure to look at those here in just a second. Let's see. But this gold market right there, 5,094. You've got converging indicators. You've got a 9 EMA, which is right there, 5,100. You've got 38% right there, right around 5,094. That's a pretty good zone. Maybe 5,095, 5,097.50. Probably a pretty darn good entry point. I would be looking at that for a scalp, and I haven't looked at gold for a scalp in quite some time. So I definitely wanted to cover that before we sort of get rolling a little bit deeper into our coverage of the markets. But yeah, today I'm more than happy to go everything else, look at anything else you guys want to look at. Not a big news week, really a slow news week. I've had a lot of fun though. I mean, it's been great trading. I had a great trade last night on EURUSD futures that was really a dandy. Broke up over the daily moving average, and I had an opportunity to make a very sophisticated trade. Scalped the moving average to the short, and then played a breakout over it and made the decision all within about 2 minutes. And it was very good. It was very good. One of the great things about being a retail tick scalper, which is what I do, is you just don't have to sit around and go for a ride you don't want to go on. If the market turns in your face, don't worry about it. Then you just go. All right, let's see. We got some questions. All right, fantastic. Tina, please have a look at the Nikkei. Absolutely. So we'll look at the Nikkei. We'll look at the EURUSD, Great Britain Pound USD, and see exactly what is going on right here. Let's get right out to our 9 EMA trading strategy. I'm going to show you a few things here before we get into that stuff. But you can see right in here, we've got a silver market on a 30-minute time frame. We had a big signal. This type of signal, though, it's coming off of this low. Boom, boom. That's your buy. It's not doing very well. We sort of bought it on that pullback to that 9 EMA, and I'm really starting to think about adding that as a potential rule or maybe an addendum to this 9 EMA, because you see it more times than not. That market pulls back to the 9 an awful lot, and any way that we can improve our entry point is going to improve the risk versus reward ratios that we're looking at. So this right here, you can see we're still in the red a little bit, but you know, you're one good break away from potentially going up and having a look at something very, very lucrative just based on market structure. So the top side profit target, I've got somewhere right around 89, somewhere right in that zone. We can certainly be looking at that. Is it a 1-to-1? It's pretty close. I can't see my cursor so big, but somewhere in that zone is going to have an opportunity to succeed. Made a video yesterday on the trade return calculator. That'll be hitting YouTube probably in a week or two. Pretty good way to figure out exactly what you need to be getting out of these trades to be long-term profitable. So remember, if you aren't familiar with the 9 EMA and you'd like to become acquainted, be sure to check out our page here. I dropped the link in the live chat, and I believe the folks on How to Trade have already seen it enough. But if you're brand new and you haven't seen it yet, go on over, enter your email address, and you get the strategy pack. You get the PDF, you get the videos, you get the whole Marianne, you get the EA, the custom EA that I built, and you guys can just knock yourselves out and have a lot of fun with that. Real quick, we'll cover the EURUSD, Great Britain Pound USD. That's a good place to begin, and then we'll get on over to the Nikkei. I love the Nikkei. The Nikkei is one of those markets that I'm jealous that I don't have CFD access like many of you international traders do. I talked with a gentleman last week that was in the Middle East, and he said, I love CFDs. And I said, yeah, me too. I don't get to trade them, though, so I am jealous. The Nikkei is a fantastic market, and it gives you just that many more opportunities potentially to get involved. Let me see, Jason, Friday Eve. Yep, it's almost No Donation Friday. I already requested a payout. I'm going to be taking it pretty easy tomorrow. Absolutely. Let me see, Babjeez. Yo, Shane, today Iran talks affected the market, especially the NAS. Well, I mean, we're going to look at the odds of what exactly is going to happen there, if we're going to go to war or not. Gordon Williams, hello. Hello, Gordon. Good to see you. 1906, MIS. I don't recognize the name. Hello, Shane. Please explain why you don't trade from the 50. By the way, I'm a Forex trader. Does that matter? Yeah, I'll be sure to cover that in a second. What's up with gold? We already covered gold. It's choppy. Pretty good entry, though, right there. We just showed you a minute ago. Yes, sir. Hey, good to see you. Yes, sir. Mountain FD, been sideways for 2 days. Oh, that's a fact. I mean, gold's finally settling down. I'll be trading it soon, probably in March, and I'll keep you posted. But I trade the futures contract, so that's good. Good evening, sir. Tata, good to see you. Good evening, good morning, good afternoon, wherever you may be. All right, guys, we've got a lot to get to. T. Marina, good to see you. T, welcome. Let's see, Eli, Great Britain Pound, Australian dollars, very interesting. Okay, just before we move on here, I'm going to go ahead and show you a bit of what I was looking at earlier today, and then we're going to dive right into those Forex pairs. Okay, so, you know, from a big picture, I get a lot of questions, and I always like to sort of show my work when I can. And this is basically what I was looking at for the EURUSD. The question that was put to me earlier says, Shane, do you trade long-term levels on intraday timeframes? Is that pretty much all you do? Can you go to intraday timeframes to get trades as well? The answer is yes. You can certainly go to intraday timeframes. I've been known to do it. But for me, my long-term timeframes really do. They're they're the hammer. I mean, they really are. They're the hammer. So when I'm looking at something like the EURUSD, which essentially is this chart right here, this EURUSD futures, I know exactly how I want to target my trading day. So remember, we had a really good trade right here yesterday afternoon. It was fantastic. Got a nice short right in front of my daily moving average, and then I got that break, which was fantastic. And then we came back down. Today's been a little bit more difficult for intraday traders, but it's still been pretty good. And the reason why is I've got a daily 13-day EMA right there, and I've got a 13-week EMA right there. I always code my EMAs in blue. And then right here, you've got sort of a longer-term 62% Fibonacci retracement that we've traded repeatedly. I mean repeatedly over I don't know how many days, how many weeks has that been in play? A long time. So I want to really show the impact of these long-term levels on short-term price action. And I've been called, I mean, like in the medical profession, if you have a doctor that you don't believe in, you call him a quack, or you know, malpractice, or you're a quack or whatever. I have been called probably every name in the book over the last 5 years going, why are you trading intraday timeframes on longer-term stuff? And I go, that's why right there. Because supply and demand is much, much more than an intraday behavior. It's not just what happens on a 30-minute chart or a 5-minute chart. I mean, the game really is us trying to get on the coattails of the big dogs. And the big dogs, not too many of them trading a 30-minute chart or a 5-minute chart. As a matter of fact, a lot of them aren't even trading using charts. The institutional traders, they're trading using their calendars and their order books, and they're looking exactly where their liabilities and where their assets have to be. And believe it or not, those longer-term charts can show you some of those things. Now, I'm a big believer in fractal geometry and Fibonacci's, no question. I'm also a big believer in my moving average, 13-day EMA. We've got a lot going on here. And the first thing is right there, beautiful stuff yesterday afternoon. That was a tough trade to get, but we got it. This right down in here, this pullback early in the U.S. session, this was fantastic. Came right down. We had an EMA right there at 117.98. And then you had your Fibonacci down there at 117.95. Just a nice move and then a nice bounce. So that right there initially was a great trade. You could still bid this probably throughout the next hour or so as long as your volume holds up. You'll notice the volumes drop a little bit. Then you'll start running into trouble with not enough liquidity to get that hot bounce that we're looking for. Those aren't positions. Those are scalps. So to answer the question, I'm a tick scalper. That's what I do. I take small ticks. So on this, I got a nice position yesterday. Took like 8 to 10 ticks on that trade. A couple of contracts. These down in here, I'm looking for 4 ticks. That's about it. Really great stuff, though, and I was happy. So if I wanted more trades and I wanted to be more aggressive, I'm always focused on the U.S. session because that's where the volume is, especially for these futures contracts right there. Spike high. We would have been rolling right off of that spike low, that swing low, about an hour later, first hour of trade. That pullback to 50% is fantastic. 38%, you could have even taken the short from 38%, only been looking at about an 8-tick draw before you got that big move. That would have been a short-term position. Those are more risky on an intraday basis, no question. Those are a lot riskier just because the intraday price action, volume can come out of nowhere and smash any trade idea. It really can. But this was good stuff. This was really good stuff in here and got you in on a nice move. So that's sort of a look at what I do. I wanted to make sure that I covered that first and foremost because I did get that question on a private message over at How to Trade. Remember, head on over to howtotrade.com, open a free account, send me a message, and I will get back to you promptly. All right, we've got some trade ideas and fundamentals to cover, but I want to get right into price action because you guys gave me some good markets to cover. So let's go ahead and dive in, all right? EURUSD. EURUSD, basically the same thing. The same thing, only what? The prices are different. The price action, real similar to that 6E contract I just showed you, but the futures, remember, futures are priced at some point in the future. Right now we're pricing that contract for March in 117.83, so on the spot market, it's about 117.75. Now what can happen, especially when you're trading futures against spot, is the numbers will be different. The highs and the lows will be different. Now, on an intraday time frame, you'll notice that market structure is the same, but our long-term levels, they're going to be different. And the reason why is those highs and lows, those are going to be just on one long continuous contract. That is the EURUSD OTC market, right? Now, futures contracts go on and off the board. So we will be rolling over to the next quarterly contract here in the Euro FX relatively soon, or next month, a couple weeks. So we got to understand that first and foremost. Now, if I'm breaking down the EURUSD, what are we going to look at here? My approach is the same every time. I'm going to go long to short, and we're going to see if we can find some levels. So monthly levels, what do we have here? Really beautiful pullback zones right in this, from this big move. You'll notice the market has really changed since 2026 began. Right here, though, very, very basic. Spike low there, spike high. What do you have? Just very deep rotation, deep rotation. Now, What could we do here? Well, we already know January's highs and lows. We're firmly inside of January, so we're flat. We're very, very flat here in the Euro USD. That can be good or bad. If you're a rotational trader, it can be great. If you're a trend trader, you could get absolutely slaughtered trying to trade these markets. So let's go ahead and back this thing off. We can go to a daily for right now, but I'm not really interested in that either. I want to see a weekly. We have to have something with some range. All right, there it is. This isn't bad. So the real question is, where would you draw these Fibonacci's from? Spike low there, swing high. That's what I would be based on. You don't want to start doing this when the markets get really tight. Spike low, spike high, spike low. You don't want to do it. So what you want to do here is you want to just get a good look at a range that you can sink your teeth into. And, maybe that is what pretty much this year's range thus far. So right now you're trading right at 62%. Interesting zone at 117. Be careful there. 117.71. Be careful there. I don't know that it's the time to take that long just because it's been so tight this week. At some point, we're going to open up, just probably not today, right? In any case, right here, 78% would be a much better election. That's what I would be looking for. I will get undoubtedly asked a lot, Shane, are you bullish or bearish? Don't care. Genuinely don't care. Euro USD long term, I'd say I'm probably bullish. But am I bullish or bearish right now? Don't care. Don't care at all. We're just going to trade the levels and see what we can do. You can see right there, that 62% on the weekly does coincide with the 13-period EMA, which is at 117.63. So that area between probably 117, maybe 75, which we're trading right now, to 117.50, probably pretty good. I would wait. I would probably wait for a hard test of that EMA right down there at 117.63. And you'll notice that EMA is in a different spot than it was for the futures contract. The reason why? The highs and the lows are different. The ranges are a little bit different as well. So that right there, that would be what I would be targeting. Market's flat. Market is absolutely flat. So you can probably take a pretty good trade from right there. Actually got a lot of confidence in that to the top side. You just really want to watch last week's low. If you break beneath that low, you're going to go down and probably check out our next port of call, which is right down in that, what would we say? I mean, what's a good zone down there? Bollinger midpoint, 117 even, fantastic. 116.85, pretty good. 117 area, that's probably a pretty heavy buy, especially if you're working on this Euro USD. Let's see, Ralph H., good to see you, Ralph. Welcome. All right, let's go ahead and back off and take a look at the Great Britain pound. This one's a tougher one, a lot tougher. You can see we've got support and resistance identified everywhere. You're coming off a little bit here. And what the key thing to remember is this. When we get Fibonacci levels lining up on different time frames, it's pretty good stuff. It's pretty good stuff. So let's go ahead and reverse engineer this so I can show you sort of in real time what I'm thinking and what my process is. Very simple, though. Not hard. Spike low, spike high, 3-month range. Now we're starting to come off a little bit, but we're still firmly inside of January. Firmly inside of January. So what do you want to do here? You want to define exactly where a good support level could be and identify some areas that may be trouble. So this area right here is interesting. Broke beneath 38. That was pretty good. I'll show you that in a minute. Now we're at 50%. So I just got the question on the live chat. Let's see, Shane, why don't you trade 50%? Oh, 1906 Ms. I don't trade 50% for a couple of reasons. Number one, I've just been chopped up way too many times in the past. Way too many times being chopped at 50%. And what I mean is the market gets to 50% and then nothing happens. It just sort of goes sideways until it finally breaks out and beats me. That experience was largely from trading futures and commodity futures. WTI crude oil, gold. I have to say that 50% in the Forex, it's probably worth looking at. It's probably worth looking at. Now, I don't need it. I mean, I don't need it. I don't care at 50%. Like right here, you would look at that monthly chart and go, Shane, I mean, 134.36 is 50%. We've already traded way up. I mean, that's a banger. Why aren't we trading those? I leave that completely up to the audience, to anybody, to the traders out there that want to trade it. If you guys want to trade 50% retracements, go for it. I don't. I don't even have the 20-something. I memean, if you pull up your Fibonacci tool on whatever you're using, whether it's this or MT5, you mean take a look, 26.1 point or 2.618. I don't use anything. 0.236. I don't use that. I don't use that. This one, it's not even on my charts. Not even on my radar. And on, probably probably would be doing this too if we weren't live streaming, but I got a lot of questions when I first started. Where's 50% at? And I go, I don't like 50%. And they said, why? So I spent more time explaining it than just putting it on the chart. I do it because it gets choppy. I don't do it. I don't need it. I don't sit around needing 50% to hit. What I'm saying is I don't want to trade that badly. There's so many trades out there that if it's a 50%, probably Euro USD should trade 50%. That works like a charm. I see that a lot. It worked today on those Fibonacci retracements intraday. Worked perfectly. This right here, Great Britain Pound USD, probably worked just fine. Got you in, got you long, got you out. You can't beat that. But for this pair right here, though, I'm looking for the deeper move. I want to see the deeper commitment right down here to 62%, somewhere around 133.34, somewhere down in that zone. All right, let's back off to like a weekly. And what do we have here? Got a lot of good stuff here. So we've got our monthly Fibonacci's up there. I really like this. Spike low, spike high. That's a nice 2-week range where we saw just incredible participation. See the way that lines up? That's the essence of fractal geometry and fractals. The fractal nature of price action. I'm not going to try to be a statistician, because I genuinely don't care at all about being the smartest guy in the room. I want to be the person that walks away each day with money in my pocket. That's what I want. Don't want to be an academic. Don't want to get invited to go give speeches on Fibonacci's and fractals anywhere. Don't care. Genuinely don't care. I want to make money, and you guys should have the same mindset. You shouldn't be so much caught in academia. You should be a trader. We're traders first. And when a trader looks at that chart and says, well, the fractal nature markets, don't give a shit. How do I get the money out of there? How do I make the money? And the answer is nailing my trade locations. That's it. Can these levels help you? Yeah, of course they can help you. Now we've got a lot of other strategies that you can use that are going to help you just as well, probably. But this is the one that I typically do because I'm comfy with it. It's like an old pair of slippers. So what was always the rule? I don't trade 50%, but I do trade 78s. And also take a look at that Bollinger midpoint down there, 134.46, 134.50. That's absolutely fantastic stuff. So right in that zone, somewhere right in there, that's key. This is key support, key downside support. So if we do break through this area, then we're going much lower. And you can see right down on this zone, the beginning of price action, the beginning of this bullish market structure lines up beautifully on 61%, 62%. So this area down here would be another really nice scalp to the top side, really nice play. So I'm looking at that closely. I'm interested, though. I'm interested in this. One last thing that I will point out. When you see really a hard strike, and that is a hard strike at that long-term 50% level, and that thing bounced up, that is a beautiful trade. Don't ever let me scare you off of those trades. If you're comfy with 50 and you like 50, go for it. You don't need to hear me sit there and rail on about 50%. You like it, trade it. However, last week's low, keep a close eye on it. Last week's low is right down there at 134.34. Now, that's pretty much the low for February as well. We're going to be turning the clock over to March, turn the calendar over to March on Monday. That's going to be the first trading day of the month, so we need to be very careful that we don't get caught up in a washout. I'd probably be holding my water at this point, but if you wanted to take another scalp maybe this week from this zone, I wouldn't have much of a problem with it. All right, Nikkei. Let's have a look. We had a question on the Nikkei. All right. So with the Nikkei, it was easy for a long time. It really was. 50%, piece of cake. Or excuse me, not 50%, but 50,000. If you had an opportunity to buy 50,000, you bought 50,000. It was easy. There was your move. You came back. You bought 50. Sold off a little bit, came back, ended up finally getting our hammer formation. Right? There's our hammer right there. No question about that. That's not a hammer. Not really. I mean, it's a decent one. I would say that's probably a hammer. But then you finally got the hammer right there. Nice, long, lower wick, and then you close right up towards the top of that candle, and there's your hammer, and you're off to the races. It was easy back then. I just said, 50,000's huge. Keep a close eye on that. This, not so easy. Things are different now. Things are different because we have a different key level to work with, 60. Now, is 60,000 as big of a deal as 50? I don't think so. This is a weekly chart. We traded 50,000. What do we go to? 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 straight weeks, 9 straight weeks. That's 2 months. You know, a 60-year trading year, you hung out at 50,000, right? Well, now you broke. Now we finally broke, and now we're headed north, right? So there's your big move. We're up to 62.5. Probably washed out a lot of the scalps from beneath 60, and now we pulled back a little bit. So there's a couple of ways to look at it. Right there, your spike low. And then let's see, go right there to your spike high. It's going to be interesting pullback zone right around 62%. That probably wouldn't be a bad entry if we get a shot at it. You're probably not going to get it this week, but maybe next week, 55.8, or excuse me, 55.9, somewhere down in there. It's not bad. That really isn't a bad trade. Can we do anything to get more current? I'd say, yeah, let's go down to a daily and see what the trades look like for the last couple of weeks. Okay, key level. Clearly 60,000 is a big deal. You can see we washed everybody out, and then we reversed right down. That's 1 day of action. All right, let's see. Hope I got a call coming in. I can't take that. We're live. In any case, reversal right there. Compression, 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 break. Finally, we broke, went right back up to 60, and then we pulled off to 58.5. So do we want to be long or short right now? I think it's hard. I really think it's hard because if you're short, I understand why you're short. 60,000's played huge. You could put a stop loss above 60 and then just play this retracement back down to maybe this value area right in here, this compression zone right here. You could do that. Could you also be long? I'd say, well, if you're holding longs right now, you're probably in trouble unless you're holding them from down here somewhere. Could you build a long trade to try to capitalize on a return to 60? I'd say, yeah, sure. Of course you could. There's your Fibonacci's, 62%. 57, somewhere down in there, would be a pretty good long. That's a better one. 78% down there at about 57, 250. And you've also got that 13-week EMA right down in that zone. Pretty good stuff. So I like that. I'm really I'm interested in that Nikkei. I'll be watching that one. Thank you for asking. I haven't covered the Nikkei in so long that I almost forgot how to price it. Almost, right? Interesting stuff. All right, let's see. Hope that helps. Ralph H., good to see you. Ralph, welcome. All right, let's see. I've covered most of these questions. Let's see. Babjeez. Yo, Shane, today Iran talks affected the market, especially the Nas. Yeah, I'm going to go ahead and show you the probabilities of us striking Iran here in what timetables we're looking at. Most of us believe it's going to be a foregone conclusion that there is a strike in some capacity. But there's a lot going on in Cuba and Mexico as well. We had a big international incident in Cuba during the overnight, and it just seems to me like I guess you'd call Cuba maybe part of Latin America, not really though, but it just seems to me like everybody just south of the United States, it's absolute chaos. Now, I've never been to Cuba. I actually heard good things, but also heard that it's an incredibly challenging environment to live just because of the governmental overreach. I don't know, but we do know we had an incident there, and you don't see very many incidents in Cuba. You just saw one. So let's see here. What's up with gold? Yeah, we already got that one. Let's see. Great Britain pound, Australian dollar. Yeah, Eli, I'll look at that one as well. Andy Tong, good to see Andy. Welcome. Let me see. Adesano, hello from Nigeria. Hello. Let me see. T Marina. So Shane, a week or so ago, you said, you said you'd show us your P&L for the week. My P&L for the week. Interesting. My P&L for the week. It's a good question, T. All right, let's see what I can do here. See if I can show this without showing my account number, if we can do that. Now, here's the deal. This is one of my accounts, one of them. I have several. This is one that I sort of was doing some high-impact tick scalping, and I wanted to make sure that I was dialed in correctly for what I needed to do, what I needed to get done. All right, let's go to make sure my account number's not on this anywhere. All right. We're going to go from February 1st through today. All right, this is one account that I have. One. This is real money. These are actually a pretty good look at, I would say, a limited leverage month. I have about 5 accounts. This is one that I trade on. But this is real. I stand by these numbers. I stand by this performance. Not horrible. Not horrible. Could have been better, but not really horrible. So here we go. This is a good look at my P&L. My P&L for the month through, February 1st, 2026 through today, February 2026. Today's the 26th day of 2026. So here's what you got. You've got a net profit right up in here. You got a gross profit, a gross loss, which was sort of fantastic. I was really happy that the gross losses were really small. But some of the things that you guys need to be looking at, especially if you're interested in being a trader for any period of time, is, let's see. Of course, my picture's in the way. I'll have to refigure this in a second. Let's see. So you've got the net profit, and that's after commissions, all right? But right there, you have total number of trades was 45%, profitable 77.8. That's pretty hot. Number of winning trades, 35. Number of losing trades, 9. Number of even trades, 1. Average trade was $36. These aren't sexy numbers, believe me. You're not going to wind up trading Goldman and Sachs money, but this is how you can do it cash-wise. I trade for money, cash, and this is how you can do it. Average winning trade was $58.64. Average losing trade, this is a big one, $48.06. My losers are smaller than my winners. Now, what is that? Come on, I preach it every single day. I preach it every day. What is it? 1-to-1 risk versus ratio, right? What do I have to do to be profitable? Okay, I had 77.78% of my trades. I'm losing more than I'm making, or excuse me, I'm losing less than I'm making on a given trade. There it is. 58, you're making 58.64 per trade. Remember, this is after commissions, and then your average losing trade's about $48. So you're outpacing that 50-50. Your break-even rate only needs to be 50-50, and it's up around 77. That's called an edge. That's a 27% edge. It does not take long at all before you start to see that type of thing, that type of P&L curve and return curve kick off. Average number of trades per day, 2.72. Average time in the market, 3.75 minutes. Profit for months up around $2,000. You can see the commissions, though. What I pay, $400, $380 in commissions, something like that. At maximum time to recover, 1.27 days off of a loss. And the longest flat period, 5 days. It means that I sat there for 5 days and I was ready. I didn't take a trade. Sometimes I didn't take a trade. All right. As far as what you have going here, the thing that's probably the most striking, most people will look at this and they'll say, well, okay. Largest winning trade was $140. Largest losing trade was $125. Maximum consecutive winners, 15. That means you're showing up and you're winning every day. That's the idea. Make money every day. Maximum consecutive losers, 4. Didn't feel real good about losing 4 in a row. So essentially that's what you're looking at for my performance. I don't know if that helps you, Team Arena, but you can see that this is actually pretty good. Let's go through I don't know. We could look at the analysis if you want. Stuff like this, cumulative net profit curve, things like that. Let's go to there's just so many things you can look at here. Net profit, you can see. I mean, you're going profit every day, profitable, make money every day. A lot of people don't believe it can be done. There's your proof. So that's a good look at my monthly performance. Pretty happy about it. And that's one of the reasons why I see trading a lot different than most people. Most people in this industry are going to sit around and they're going to talk about percentages. And they're going to talk about, well, I made 10% or I made 8% or I risked 9%. I'm about money. That P&L right there was done with a modest account. We weren't taking huge trades. You saw the numbers. That's tick scalping. That's what grinding is. And I would much rather see the traders in this room be grinders and make money every day, as opposed to sitting around and trying to be a Bitcoin hero or an XRP hero and go, I'm going to make $1 million on this trade. You don't have to do that. Believe me, I am not calling markets right. I'm sitting there, I'm saying, I know what's going to happen when I get in the market and what I'm going to do and when I'm going to pull the plug. Now, you can look at returns like that, and you could easily say, Shane, you trade like a pit trader. Yep, that's who taught me, and they taught me that there's a lot of power in small ticks. One of the videos that pretty much nobody's watched, a few of you have and a few of you like it, is a tick scalping video. It's fantastic. Shows you exactly how to grab some, put it in your pocket. Grab some, put it in your pocket. So something to think. Let me see. T Marina, a bit hard to see. Yeah, sorry about that. That's about all I have for text-wise. Let's see. Can you zoom in on it a tad? I'm sorry, it didn't come out very well. 35 trades for some of us are daily trades. No wonder why profitability is a problem. Let me see. T Marina, what's your win rate and equity curve on that account? I think I showed you. My win rate was 77.8%. 15 consecutive winners, 4 consecutive losers was the worst. And then the curve, I showed you the curve at the end. $2,000 a month. Well, if the size of the account is small. I mean, it's all about just being able to dial in your risk. Really, Tina. You don't need to. Guys don't need to have $100,000 accounts. Let's put it that way. That right there was done with about a $5,000 account, and that's the idea: is to never get into trouble. Cut your losers off. Come back and trade tomorrow. Let me see. Ralph H. Probably the most important metric: make more than you lose per trade. 100%. Make more than you lose. Make more when you lose. No profit share with those proper firms. No, there is no profit share. Maybe I'll see if I can, Team Marina, if you couldn't see the actual stats, maybe I'll blow it up and put it on a slide. That's for sure. Yeah, maybe I'll do it tomorrow. Tomorrow will be the last trading day of the month. But that's a good question. I always get called out for not showing any of my stats. There they are. Maybe I'll put them on X later. I don't know. I don't like getting hung up in the money, the dollar amounts, though, because what happens inevitably is there's always, well, you don't make very much, or, wow, how'd you do that? And I don't want anybody thinking that. Those two thoughts will just knock you out quick. Well, I'm not making enough. I got to ramp up my leverage. It's happened to me before. But if you're disciplined, I mean, I'm doing that trade in 1 and 2 lots. It's relatively simple just to kick it up to 10 lots. It's not hard. Mentally, you got to be able to handle it. But that's one account. So I always recommend having several accounts with several different brokers. I always find that to be a big deal. But yeah, probably go back and rewatch it. Maybe blow it up. I can see if you were watching that on a phone or maybe a small screen. I forget my screens are huge, so I get a lot here. All right, guys, we got a lot more to cover here, but we did take a bit of time and show the P&L stuff. Let's get back on over to our 9 EMA trade. Right there, there you go. You're up about 1,500. You're starting to see this trade really start to bear a little bit of fruit on that silver trade. U.S. Tech 1 hour. Interesting. Very interesting type of a potential trade here in the next hour and a half or so, especially with this 9 EMA. What we've got developing potentially is a buyback. So if you do get the buyback area right up in there, got to get that crossover. Could be good. Remember, we have about 7 bars that we have to work with, so we're still in oversold territory here on the RSI. So 1, 2, 3, 4, 5, 6. You're probably going to need that to cross over relatively soon or you won't get a trade. So maybe something to think about there. 15, though, the 15-minute, you might be able to get a real sweet trade there on the 15-minute chart as we roll towards today's close. Good stuff, though, on the U.S. Tech. I'm very happy with the setup. I think that this could be a very good setup going into late in the day. Now, as far as, what are you doing with the NQ during the day, during today's session? This is relatively straightforward. You can see the volume comes into the market big, opening bell, ding, ding, right? If you wanted to work your Fibonacci's from right up in here, you could. That would be sort of the top of the bearish price action, something like that. Come right off of there, 38% is great. If you wanted to be a little bit more or strictly adhere to that U.S. session, then your Fibonacci's would look something more like that. Still pretty good, though. I mean, that's not bad at all. A little bit of a run there. Personally, when I see a nice uniform move like this that goes from the upper Bollinger Band down through the bottom and then the pullback there, yeah, let's get it. We can do something like that. I'm relatively straightforward. So do you want that trade late in the day now on this NQ? 25.071, probably a scalp. Very volatile, though. This market here is crazy. I don't trade the Nasdaq, E-mini Nasdaq. Trade the micro sometimes, but it should be good. I'm looking forward to maybe getting involved back with gold in March. We'll see. We'll see how it goes. That's for sure. Let me see. Bab G's, give me 77% profitability anytime. Yeah. I mean, you're hitting almost 8 out of 10. It can be done. People say it can't be done. It's done every day. A lot of the big traders out there, the big money traders, the successful ones that aren't on YouTube, that aren't sitting there trying to convince somebody to buy their black box system, those are the guys that are doing that. Had an opportunity. Let's see. Yeah, quick story here, and then we'll run through our trade updates and get you guys ready to come back. Trade maybe a no donation Friday. When I was doing the interview with Business Insider, and it was about, what was it, a year and a half ago, I was working with Layla Maiden on that, and she had done a whole series on day traders and what it took for them to be successful, and most of them were real high-profile people. I wasn't. I was probably the lowest of all the profile of the traders that she'd done. And what she would say is some of these folks were trading on stocks. They were scalping on stocks, and they were just trading this big size. They were trading big size, and they were taking up small profits, but they could really do it. And that's sort of what I was taught to do back in the day when I first started. The first thing that you would say, or the first thing that I was taught, was if you can make pennies, you can make dollars. That stuck with me. If you can make pennies, you can make dollars. Because for some people, you're going to look at those metrics and you're going to say, geez, they only made $1,600 for a month. I'd say, if you can make pennies, you can make dollars. That's with ones and twos. And if you're serious and you show up with the $50,000 account or the $25,000 account, and all of a sudden you're trading tens, you're trading 10 lots, multiply it by 10, multiply your returns by 10. What I'm saying is the dollar amounts are all relative. And a lot of people want to make a lot of money in this game, and that's great. So do I, believe me. That's why I'm here, is trading for money. But we have to be realistic about the ways that we can get there. And I've always been a fan of scalping ticks. And if I want to make a lot of money on a trade, just using bigger leverage, but being very, very quick on the trigger. Like Ralph H. said, the most important stat there is the most important metric is make more than you lose, 100%. You cannot let those losses go against you and then rotate back up over and just take a few ticks. That's not tick scalping. That's not. I mean, if we're sitting here, I'm looking at this chart right here of this Great Britain pound, Japanese yen, we're going to talk about in a second. If we're sitting right here and I'm saying, okay, I'm going to buy this level, and then I take this huge draw, and then it comes back in my favor by 5 ticks, and then I take it off and I go, okay, that was a great tick scalp. There's a horrible tick scalp. The best trades are the ones that don't go negative at all, especially when you're tick scalping. Now, on the Euro FX, that's hard. It's always going to go against you, seemingly 1 or 2 ticks, always. Very rarely are you filled just perfectly. But things like gold, things like crude oil, things like your indices, your E-mini S&P 500, E-mini Dow, E-mini Nasdaq, a lot of those, they fill you perfectly. Those are the best tick scalps. So as long as your losses are smaller than your wins, you're doing well. Now, most folks in this game, in trading, and a lot of you that think this way, they're looking for those huge home runs. And I've talked with a lot of people that call themselves mentors and professional traders, and they're saying, oh, I'm waiting for that 10x, 12x, 15x. And I go, great. I don't have that kind of time. I'm not going to sit around and wait for those trade setups. Are they there? Yeah, they're there. And as they come across our board during the year, we'll point them out to you. But big picture, how often are those 20x trades coming around? Not often. So sometimes it pays to take smaller profits. Sometimes. Not all the time, but sometimes. Just a thought. High winning percentage. Keep your mind. You don't have to worry about the big stress of this game. When the stress happens when the markets go in your favor and you're sitting on a $20,000 winner and you let it bleed against you and it comes back and now you're even and now you're down 5,000. Really hard. Really hard. Let me see, Andrea. Great. Yeah, thanks, Andrea. Let me see. T. Marine, is it a good idea to dedicate one trading strategy for one specific brokerage account? I do. Now, one of the things about Switch, I noticed with Switch, you can open multiple accounts. So you could have a scalping account. You could have a position trading account. You could have a 9 EMA account. That's 100% what I do. I showed you my tick scalping account. Didn't show you any investment accounts or anything like that. But I definitely recommend, like, if you were going to trade one strategy, I tell you what, I mean, that's what I was told to do when I was young. Was like, listen, the big money's in catching these day trading moves, but that doesn't mean you can't scalp in between. And so what we would do is we'd have different accounts. You'd have a day trading account where I may be holding shorts, trying to get that big move, maybe that 3 or 4X. And then I'm scalping to the long against the move in a separate account. So 100% T Marina. I mean, I see accounts and trading accounts as being multiple. You know, you want to be multiple if you can. And that's going to sort of keep you honest. It's the truth, because if you get into, like, let's say I was going to be in a tick scalping account, and I'm a firm believer that if you're a tick guy or you're trading like that, you don't need much money in your account. You really don't. You should be making returns. That's the idea. But for a day trading account, I would need a lot more money because the risk is just bigger. And, you allocate that cash to that account, that capital. And another thing, you may want to use a different broker. You may want to have different accounts with different brokers just to sort of, limit your counterparty risk. However, it is convenient to have them all with one broker. You just manage them. That's for sure. It's not a bad idea at all, T Marina. Let me see. I got in the Nikkei at 59.72, and it was nearly TP, and it turned. Yeah, that's tough. That's one of the reasons I take the profits so fast. Let me see. Great Britain pound, Australian dollars, interesting, 10x. Yeah, Eli, I forgot about that one. Let's go and look at it. Let me see. Babjeez, I've learned the hard way that tick scalping is more powerful over time than trying to time big swing trades, at least for me. Yeah, and listen, there's no right answers. Everybody here can make money in a million different ways. There's no right answers. You just try to be on the right side of things. And that's not, that's sort of what you look to do there. That's for sure. Lebo, is it better to get small, consistent profits or once in a while a large profit? It depends. It depends on your personality, I've been a firm believer that I wanted to win a lot. And when you listen to traditional finance and a lot of the folks in this game, they will tell you what I just showed you is not possible. Our sample set was significant. What did we have? 47 trades, 45 trades? It's not huge. It's not 10,000. Statisticians are going to say, okay, show me 10,000. I go, I don't have to show you anything. What I'm saying is this. I knew immediately that I wanted to be a higher probability trader. And I knew that trying to get 14 or 15 or 20 X's wasn't the way to get that done. Now, because I got to be around somebody that did this for a living at a very high level that taught me how to do it, I knew it was possible. I remember my Uncle Gary, who was my mentor, that taught me pretty much not everything I know about it. I've taken the Fibonacci's to the next level, but he taught me market profile and all those things. And I watched him win, 15 trades in a row like it was nothing. And I watched him do it in a week. I sat there and I go, how can you win that many trades in a row? And when I say win, it doesn't mean that you're not taking big draws. Your trade locations are dialed in. The markets are cooperating. You've lined up your risk versus reward for every trade, and they're working out for you. And I sat there and I watched, and I said, man, 15, how the heck could you do that? But I knew immediately it could be done, and I wanted to do it. Now, nobody really believes that, and that's okay. I think the conventional state of this industry is that everything has to be a big move. You got to get a big move. You got to get a big move. For instance, Great Britain pound, Australian dollar. Here you go, Eli. You got big time dumps here, back-to-back months. This is fascinating because we're going to roll into March trending. This is a trend. Typically, I would wait until the market's outside of my Bollinger Bands to say that it's trending, but it's trending. You're coming off in a big, big way. What exactly could we be looking to do from a trade perspective? Well, I mean, when I see moves this big, I usually like to step back time frames, and it's really hard because you end up going to yearly charts, and people don't really, you don't really care, and that's fine. But you do need to know what exactly we're dealing with here. Okay, so 50%'s there. That's fascinating to me. 181. It's way down the queue, but, a few more bad months, you may get down there. That's a huge demand zone, maybe where we're going. So 181, I would have that on my radar somewhere in the back of my mind. It's probably not going to come into play right now. So right here, relatively straightforward. I mean, you've got a downtrend that's broken out on the weekly. You're looking to sell retracements any way you can really get it. So I would go to my daily, something like that. Maybe a pullback. I mean, it's so hard because the market's not pulling back. It's not pulling back at all. Let's sort of reverse engineer this move. Spike high, spike low right there. Would have been right 38, 50%. Maybe we should start trading 50%. Then we come off from there. So for me right here, I mean, this would probably be all about getting down to about maybe a 4-hour chart. And if we could get a pullback, right there is where you'd start your Fibonacci. But if we could get a pullback into this range, maybe get to sell, 190s, something like that after we get a little bottom in. Yeah, it's not bad. But I would definitely want to be short as opposed to trying to be long here. There's folks that are trying to be long. Look, they tried to guess at 190. They tried to guess that was the bottom and get the big pop. So something to think about there. That's for sure. Tina Xing, I like it in and out fairly quick too. All right, fantastic. Take the money. Get what you're going to get front and center. Everything is subjective, 100%, Eli. It's all about what you're comfortable with doing. And I mean that. I mean, you just got to be comfortable. That's the name of the game. That's for sure. All right, everybody, let's go ahead and have a look at a few of these trade updates, these trade ideas. Great Britain pound, Japanese yen. I put this one out a little bit earlier today. Interesting zone that's coming up about 208.31, something like that. 208.31, February's low is going to be on my radar as we start March. That low down there, 207 and a quarter-ish, 207.23. That we could get some bearish extension there, but we're not there yet. So we put the trade idea in from this level. I like that as being potential downside support early in March. And it's about 200 pips away. We might have an opportunity to get there sooner rather than later. We just got to stay tuned. And then right here, let's see 2025's lows up next. For natural gas, this one was one that we definitely wanted to cover as well. You can see he had just a horrible week, off about 6.75%, and now we're sort of trading down to 2025's low. I think this one could come into play relatively soon. We're watching our news cycle, that's for sure. As far as our big time week 9 economic calendar, there really was nothing this week. It was very, very slow news week, except for the State of the Union, which really didn't shock the markets very much at all. Thursday today was jobless claims, and tomorrow's no donation Friday. There is nothing on the calendar for tomorrow. You can see right here, initial jobless claims came in a little bit better than expected at 212,000, beneath expectations at 217, but above the previous release. Continuing jobless claims, 1833, somewhere in that zone. So you're coming down just a little bit on your continuing. Don't get wrapped up in that. It's all about initial. We want to know if somebody's getting into that unemployment line or if they're coming out of it. Right now, there's a lot of folks in it. It's coming down a little bit. But the big one is the initial jobless claims. A little bit better than expected, but still formidable with regards to long-term trends. I'll show you that in a minute. Natural gas storage came in at negative 52 billion cubic feet. Interesting, not as bad as last week, but a little bit more than expected. So consumption's up a bit. We'll be watching that as we get into the spring. But that, to me, moves the markets in the short run. I wouldn't worry too much about that just yet. 4-week T-bills and 8-week T-bills, those came in really pretty much on schedule as expected. The big event that we covered was your initial jobless claims. That sort of was the story of the day. You'll see that you're still very low. You're still very low with respect to where we've been the last 3 years. So, you get in and you look and you say, okay, what levels are we at? Well, you're still pretty low. You're beneath the 2 or 3 year average at least. So is the jobs market good or bad? We're going to find out more next week at NFP. A couple of news stories we need to cover. Cuba, this was a big event. Florida boat carried Cubans intent on infiltration. There was 4 killed. This is interesting here. Russia says Cuba situation is escalating after deadly incident with U.S. tagged speedboats. So this is being seen as sort of an act of aggression from the United States. I don't know. I have no idea what happened here. I can tell you that this is an incident we haven't seen in a while. And we know Cuba's allies, and we know that the United States has sort of been in the news a lot when it comes to Venezuela and cutting off the flow of oil to Cuba. The United States has put a lot of pressure on Cuba. There's no question about it, and this is interesting. So we're going to keep our eye on that situation. Mexico You can see that the violence has died down the last day or so, but I mean, it is absolutely no way anybody should go to Mexico. Former FBI agent. There's been travel bans, pretty much folks that are getting ready to go on spring break, and it's just too bad. All the spring break plans are getting canceled, so a lot of folks aren't going to be going on their trips. I used to go to Mexico almost every year. It was a lot of fun down there. We'll see if the situation improves. I'd love to go back. Cabo, Cancun. Geez, where else? Was it Ixtapa, Acapulco, Manzanillo, Puerto Vallarta? I've been to all of them. Really, Cabo was fun. Cabo San Lucas was fun. It's a shame to see that happen. It was a really beautiful place, too. Nice people, great people. It's just a real challenge right now in Mexico. All right, so here's our polling market. We're going to take a look at our betting markets on exactly when a strike could happen with regards to Iran. February 26th, no, that's today, 1%, 6%, 12%. You can see they start to go up as we get further out. So what are we pricing? We're pricing a significant opportunity or a significant chance of a U.S. strike by the end of March. You start to get out here about 2 weeks. Turns into about a 40% buy. So it looks to me, and then by June 30th, you're going to see 67%. But realistically, we're looking at a strike in March more than likely, according to these betting odds. As far as politics go, has anything happened after the State of the Union? Not really. Democrats are still expected to sweep in the 2026 midterms. We'll be watching this more and more as the year goes on. But right now, the sweep means they're going to be taking a Democratic House and a Republican Senate, a Democratic House and Senate. I don't really know. We're going to have to sit down and really study what these mean and figure out what could possibly sway those probabilities and have the biggest impact on the markets. Okay, I think that I'm going to go ahead and take off a little bit. I got stuff to do. We got to make some videos, so I'll be shooting some videos today. Also got to do a few other things with the end of month bookkeeping, but I'll see if those graphics didn't come out very well. Maybe I'll put some graphics together. It's just the fonts in my platform. The fonts are always so small, and you can't really see them. So I might post the monthly performance over there on X, maybe at ShaneV_trader, or maybe we'll just cover them again tomorrow real quick. I don't want to spend too much time on the money, though. I don't like talking money, guys. I don't like talking cash or money because, when you're in the markets, it's really nobody's business what you're making. And I really recommend all of you to adhere to that because you'll find with friends and family, if you start making some real money in the markets, it changes things with your personal relationships. It will change things. I'm pretty much tight-lipped on all of it. Just don't ask me. That's sort of my policies, don't ask. But I know it's important from time to time that we show some performance metrics. And those are the real ones. Those are according to Hoyle, believe them or don't. That's there. That happened. That money's in the account. And it wasn't glamorous, but interesting. I'm looking for just March to be a fantastic month. But, we got a lot in front of us, a lot to deal with. That's for sure. We'll see. Let me see. Absolutely. Be safe, you too, Eli. Let me see. Lebo, I am comfortable with scalp trading, but I am slowly starting to switch to swing trading. I want to spend less time in front of the computer screen and catch my own whale instead of these small fries. And hey, listen, I understand. Believe me, I understand. I went whale fishing last year. Not real whale fishing. You can't fish whales. But I went hunting for moves last summer. And I really got frustrated. I tried to catch 2 moves in the commodities markets, and I just missed them. And they were big ones. Those were, you can go back and watch some of the streams. We were looking for $25,000 and $30,000 moves, and they were there. The thing was, they were there. So if you're interested and you want to get in there, if you want to get into the swing trading and the catching the whales, yeah, I get it. So, interesting. All right, guys. Let's see. Babjeez, thanks for sharing. It's a big relief from the Lambos and the YouTube Traders show. Yeah, I'm not a Lambo guy. Nah, I never wanted to do the Lambos or the private jets or, Now I have been known to go on vacation though. I've traveled quite a bit, but the bling bling. I wear a Fitbit. I wear a heart rate monitor to make sure that my heart rate's in line. Just genuinely don't care. The Lambos and the private jets, it means nothing to me. We play for cash. We trade for cash. Trade for cash. You pay your bills. You take care of the people around you. That's what it's all about. The rest of it, I mean, the Italian, expensive Italian suits and things, guys are spending $25,000 on a suit. I mean, believe me, they're nice. I know a couple guys that have them. They're nice, but I'm not interested. Just doesn't interest me. If you don't take anything else away from the stream, remember that. You can do this any way that you want to do this. I encourage you to do it your way. It's like that old Sinatra song, I did it my way, you do it your way. It's no rules. No rules. Do it any way you want. All right, guys, that's a wrap for me. Absolutely. You're welcome, Ralph. Lita, you're welcome. Absolutely. And you're welcome, Bab G's. Okay, guys, I'm going to go ahead and sign off. Been going about an hour here. I'll put together a graphic or something if you couldn't really see the P&L, and then we'll walk through maybe some of those metrics again. I just did it really quick. But, yeah, the font, I was looking at that a second ago. The font was really small, so we'll watch that as well. Remember, if you need the 9 EMA trading strategy, we do have an interesting strategy pack on that webpage. Go ahead and check that out. And let's go back on over to our 9 EMA. You can see there was that buy signal. What are we, psychics? Do we know when the buy signals are coming? No, that's what the strategy is for. You know exactly when we're in a buying position. You know when you get the bar closed, and then you have an opportunity maybe to get a little bit of a runner here. It's fantastic stuff. I'm interested. This buyback in U.S. tech, this could be pretty good today. This could be a pretty good one today. So, one-click trading. I like the one-click. Go ahead and buy that thing. And then the trade would look like that, probably right beneath that swing low, or you could put it right beneath your bar. I would put it right there beneath that swing low, and then line this up, maybe shoot for halfway up, somewhere halfway up through this sell-off. As far as the silver trade goes, silver trade is doing well, starting to trend north. It looks like the bullish side of the metal markets is the way to go. All right, guys, that's it. That's a wrap. I've gone very, very long. You're absolutely welcome, Tina. You have a fantastic session. You too, T. Marina. My apologies for the small print. We'll get that remedied. All right, have a fantastic trading day. We'll see you back here tomorrow for No Donation Friday. And as always, trade the action well, and we'll talk soon. See you.